All right, we're going to be taking a look at ES, gold, and crude, and looking at opportunities. All right, so the ES, you had a level or a zone set up on 517, I think it was 517, rallied within 2 days to 519, and then pulled back, which took some time, five days later to 524. So from the zone to the rally to the pullback took about 7 days, and that set up the move. So as it came down here, what we want to see is if the buyers are still there at the origin of the rally, if the buyers are still there. If they are, you get in. And what we see is that it was evident here that when the market pulled back and sprung the origin of this rally, buyers stepped in. But first thing to see is as it was going there, it climaxed. Okay, very important that, yeah, it went there, it got oversold. Then it got bought up right here. That change of behavior, little spring, right hand side, boom. So the base was established on the spring, and the breakout, which basically told you start buying pullbacks, tapped and it went. This base projected 41.97, and we just went past that area of 41.97 right here. So we'll see how the market reacts. If when it reacts, it's going to look to pull back. The pullback area is 426. So we're looking for that pullback. We're looking for the ES to basically pull back into that 4170 area. All right. So 4170 area, and this is how you combine point and figure and Renko and bars and all of that and waves, but in a one picture, meaning you know what you're doing. Okay, you have an area. Where do you want to buy? I want to buy here. What do you look for when price goes there? You look for a change of character, a change of behavior. Obviously, how do you identify it? You can identify it in multiple ways. The two best ways, I think, are on the wave chart and the point and figure chart. Sometimes it's visible on one and not the other. And what else do you look for in the point and figure? You'll see a clear base, you'll see climaxes, you see all of that, and it's pretty clear. That's why I use it. All right, and what I like about it is the base that was set up there. What told you I am accumulating the spring. This right here, after the climax, after this big 27, going sideways with the little spring and rejecting the spring to go higher, is telling you I am accumulating. That's what the base is there for. Accumulation complete, breakout, test, get in. All right, that's what all this was about. Goes to the target. All right, next is crude. What happened? Pulled back. All right, so demand zone was on 522. Okay, 522 is the zone. Rallied for 2 days to 524. Then within 1 day, it did all of this pullback. Okay, so now you're back at the quote-unquote zone or the level or the origin of the move where demand came from already, and looking to see if demand is still there. What do you notice? Left-hand side climax, right? Like even in the ES, I just showed there was a climax that terminated the move. So a lot of times you'll have climaxes or shortening of the thrust. They'll terminate the move. After that, you have buying. Where? Right here. How? Biggest volume in 100 bars. 100, what do you call? Columns. All right, so that's your change of behavior, your potential change, set up, get in on the pullback, and rallies. This is how you're combining the levels with the change of behavior from the supply and demand zones. So you get the climaxes, or you might not get a climax, you'll just get that, but you need this to show that there's evidence of buying. When there's a climax and a base, it strengthens it. It strengthens the opinion. Right? So anyway, you get that. Climax automatic rally, which is really climax change of behavior. All right, so let me repeat that in that sequence, climax, automatic rally, secondary test, all of that. It's really, in a better way of saying it, instead of automatic rally, is climax, change of behavior, and then a low volume pullback, which is the climax automatic rally secondary test, should be climax automatic rally low volume pullback. That means that the climax was tested by a low volume pullback, indicating that they're done with the panic selling and buying the panic. Anyway, so this is your climax automatic rally higher secondary test, or climax change of behavior and pullback, low volume pullback, whatever you want to call it. And that happens from an important level. The level is important. Why? Because without that, you cannot filter data. When you have all this data, you need a mechanism of filtering it, and specifically with the goal of where to find trades. So what is the filter to where to find trades? It is the edges or the zones. What edges, what zones? Basically supply demand zones, breakout levels, and that's about it, right? Where in the past demand overtook supply or supply overtook demand. That is your filter to start looking at signals at those same areas. In this case, we see that there was a demand zone that initiated this rally. So we're looking for pullbacks, and the same area it came, the buyer stepped in, boop, now it's going higher. All right, done with that, and the final one is on gold. What happened was you have the supply area here that initiated 1, 2, 3, 4 breaks, came and pulled back. As it pulled back, what happened? Change of behavior right here, biggest price move. Price volume in 12 waves, makes a slightly lower low, sets up the test, and gives you a move. Off where? Off this supply area right here, which was tested right there, which looks like this on the lower time frame. And basically fell. Okay? Alright, that's all folks. Again, the idea here is you have a level. At that level, you look for a change of behavior. If it's there, you execute your process of execution. However, how you get in. Maybe you use halfway back. Maybe you use profile. Maybe you use, I don't know, whatever it is. But yeah, you execute the approach. And the more interesting thing here is that, or the thing that you must recognize as traders, is you don't know two things. One, you don't know whether the trade will work, whether this trade will work. You never know. Okay, because demand can come in at any time. All right, so A, you don't know any single trade whether it will work or not. The second thing you don't know is how far it will go. You don't know whether it's going to work. You don't know how far it will go. Yes, the point and figure here told me that, all right, it's going to go here, and then it made a little base and went there, but not every time, right? You don't know exactly what's going to happen. So yeah, it did this and this and all that. And there is a relationship between the cause and effect. We know that already, right? So you just scale out, right? Don't be greedy and say, oh, you know what? I'm only going to get out if it makes a lower low. So a lot of traders, they wait, they got tested right here. Where do you think their exit is? Below the low. Did it go to that low? No. It almost went to that low. It almost went to that low. After that, demand came in and went the other way. So, missing, I don't know, let's say I'll show you how much. This is 5, let's say you got in at 54. And you get 90, at least 90 ticks off this. Easy, like that's, the whole move is 150 ticks. So you can get 90 ticks. So you have to scale out some. That's what I'm trying to say. And if you get indications to get the hell out, you get the hell out. Right? Anyway, so that is what I wanted to show. We went over, I think, gold, ES, and crude. Again, the approach for trading is, and you know why this demand came in? You know why? Because you have to be cognizant of where the daily POCs are, where the daily support is. And here was daily support marked in advance, telling you, watch out, as price goes to that area, demand can come in. And that's what happened. It came in, and look what it did. You know, so anyway, take care. Have a good weekend. Bye.